Hey all, welcome to Share Trek. This is Raj here. Today I'm in a strange kind of a situation because my camera was left on all night, so it has got no charge, and I have to record right away because outside the snowstorm is howling and my two dogs are really panicky. And so I'm trying to finish this video as quickly as possible. So I'm using my webcam instead of the Sony camera, and that's why you see things are a bit big. And I'm going to be doing more of a video, the kind people do where you don't see their face, you just hear their voice. So let me get into the TradingView platform and I'll talk through the news and other things, and we'll finish the index portion with this video. The next video along with that will be the genomics video where we do genomic analysis, and the third one will be the other shares. So let's get started. Well, friends, here we are in our TradingView platform, and I have switched into the NASDAQ chart. And NASDAQ is, this particular chart has got each candle as 1 day. That is the time frame. And I can see that NASDAQ has been very careful not to fall out of the bull flag. So I'm just going to extend the bull flag out here a little bit. It has a support at around 11,971.50, but MACD is bearish. And momentum is also below average. Friends, I really don't know what the hell is happening with this market because interest rates are definitely going to go up, and geopolitical instability is definitely there. And I'm thinking about the inflation, like who is going to provide wheat, which is the basic staple. Wheat is used to make a whole lot of food, basic raw materials that help us to produce pasta, bread, cake, biscuits, name it, most of the things. And wheat production is going to be down because both Russia and Ukraine are mired in a war. And apart from that, we also have a situation where we are looking at the gas and oil and gas sector being very expensive. And this is mainly because of the war again. And the war is causing oil prices to go up. It's devastating the Russian economy. Ukrainian economy is literally taking money out of the governments in Europe and America. I'm not saying it's a bad thing, please don't get me wrong. But as long as this conflict continues, we are going to be in a situation of perennial inflation. In face of inflation, I don't see how we can continue seeing a rising stock market because consumer appetite is going to go down, consumer purchasing capability is going to go down, and because things have become more expensive, consumers will be buying less and they'll be buying only the essentials. So I can't see how Wall Street can keep going up. So my fear is that, my personal opinion is that shares are going to fall, and we are definitely going to test the 10,000. We are definitely going to test the 10,712 support before things get better. That's my feeling in the worst case scenario, but I can still see this as a bullish formation. Because it's a bull flag and it's expected to break out on the upper side. The immediate resistance right now for us is 12,168.25. So with that said, I think I'd like to go and have a look at what's happening with the other indicators. US oil is continuing to consolidate, but it has been moving down. I think it's in a bear channel which is lower, and I don't know how higher oil prices can be sustained. If you look at the real world for a minute, we have a situation where Sri Lanka was already bankrupt and it has been bailed out by friendly countries, and we have Pakistan, which is going to be bankrupt anytime soon. If you were to listen to some of their own leaders, it seems like they're already bankrupt. They have just got $3 billion worth of foreign exchange reserves in their hands. They have asked their citizens to drink only 1 cup of tea because they're not able to import tea. People are fighting over bags of wheat. That's what I have seen in media reports. So things are pretty dire in Pakistan, and that accounts for a good portion of the world population. So things are not hunky-dory. And then we have China, which is still trying to stabilize its real estate sector. And we have other problems in China post-COVID. So a lot of issues are going on out there. And now one of the risk that I have pointed out before, but I don't want to be a broken record, but one of the biggest risks that NASDAQ faces is the fact that US is slowly turning into a banana republic, because you have really controversial conspiracy theory spewing representatives being promoted into very sensitive committees. And the way the politics is going in the US right now is that it doesn't have a focus on actual fundamentals of the economy that it needs to manage, but instead it's going on culture wars. So it's not looking good for United States. And if something goes wrong with United States, all our shares and everything is going to suffer big time. So that's a big risk out there, and it's politically incorrect to speak. But it's something that we cannot ignore. US runs the risk of becoming a banana republic, and where you may have people who lie about their entire identity. Now we have George Santos as a prime example. Nobody really knows if George Santos is his real name, whether he has any educational qualifications, whether he's a US citizen for that matter. None of the things about him is clear, and he's still in the House. And there are others who have made really crazy claims, like Jewish space lasers creating forest fires in California and things like that. Now, all these people are all getting into committees, and they are starting to get into committees which really matter for the economy. And if they cannot be serious, then US is in for big trouble. So pardon me for saying this once more, but I will stop it with that. But we have to remember that's a big risk, and 2024 is going to be the time when it'll be clear whether that risk is going to be persistent and get worse, or whether it's going to be terminated. So we'll see when the time comes. But you cannot bail out of all your assets just at the last minute. So you have to keep track of these risks. Watch reputed news channels. Don't go for the spin. Always confirm with government sources and with reliable journalistic institutions before you form your opinion, so that you're very, very clear what's happening. I'm not talking to you about politics when it comes to opinion. I'm talking to you about your opinion when it comes to the risk that your shares are facing in the United States. So with that said, let's move on to QQQ. Now, in QQQ, we can see that we are still within the bounds of the bull flag. But again, what I said in the NASDAQ futures applies to QQQ as well. And if I was to pull it out for the bigger context, you can see we have a big bear channel in which we were traveling for the longest time. We had a bit of a respite. We had a support level out here at the bottom and a resistance level at the top, marked by these blue fluorescent lines, which formed our consolidation zone. So I'm going to expand the consolidation zones, because I am thinking that we have already back into the consolidation zone. If you see today's candle, when I say today, I mean 27th February candle. The 27th February candle is already being constrained by the consolidation zone, which gives me a signal that we are already in this zone, and it's going to be difficult to break through this unless something really good happens. And I don't see anything good in the horizon at this point of time. So we'll have to see what happens going forward. The MACD is bearish, and the momentum is also below average, so it does not look very encouraging to me. All the simple moving averages should be supporting the price point for a healthy chart. Right now, our 10-day simple moving average is a resistance, and the other three are supporting. So it's not as strong as it should be. S&P 500 also is doing better compared to what it was the day before, but still it's in the bull flag, I would say, but it has got two simple moving average which are restricting it, so it's not doing better than QQQ. So that's another problem. Again, MACD is bearish, and momentum is below average, and not looking great. Russell index also is in the same situation. MACD is bearish and momentum is below average, not at all looking great. And our support, which was out here, minor support, has now become a resistance. So we have fallen below this. So I'm just going to drag this upper level of this bull flag further out. And I'm starting to wonder whether it is still a bull flag. I think we are in a bear channel at this point of time. It's no longer a bull flag out here. Let me just revisit S&P 500. I think S&P 500 also potentially looks like a bear channel to me. And ditto with QQQ. So friends, I think I would declare this as a bear channel unless the market proves it to me otherwise. So at this point of time, I think we are on a bear channel. We have to be careful. And we have opened up on the lower side of the bull flag out here, bullish pennant out here. And we have not been able to get back into it. So we had resistance. MACD is bearish and momentum is also below average when it comes to Dow Jones Industrial Average. So things are not looking great, and I don't think Dow Jones is going anywhere anytime soon. It already has got 3 simple moving averages on top of it providing resistance, and only 1 simple moving average giving it support. So it's the weakest of the lot. And if you look at VIX, it has already gone above 20, and it's getting support from 2 simple moving averages. And MACD is bullish and momentum is still above average. So that's the situation with VIX. Now, if you look at the US dollar index continues to go up, but we have a little bit of a drop today. I could not make any other conclusion from the pattern that I see here than to draw a bull channel out here and conclude that US dollar index is on a bull channel. We'll put a tentative bull channel out here and wait to see whether we follow through with it. Our MACD is bullish and momentum is above average, and it had gone to the overbought level and then came back down. So we'll have to see whether it can turn back again, and I think that it will. Now, that said, if we go and have a look at the technology moving companies, then I would look at Microsoft to begin with. Microsoft did not do that great. It started higher today, but it came back down. And it ended almost close to where it was yesterday. When you look at the price of Microsoft and the movement that it made, which was 0.94 cents, it's not much. It works to around 0.38% improvement in value. So even though it looks green on the chart, but overall it has the enthusiasm that was given by the bulls were not reciprocated, and it fell down. It's under 2 simple moving averages, and it has got support of 2 simple moving averages. Apple also has done the same thing. It has come down. It started lower. That's why the candle is still green. But its initial bullish approach towards 149 was not reciprocated, so it fell down. And it's now got 1 simple moving average causing resistance and the other 3 which are giving support. It also has got some support out here at around 146.58. And again, Microsoft and Apple, these are companies which have got a proven track record and they got strong balance sheets. So when they fall, they are going to fall slow and they're going to be the last to fall. So they have a lot of strength which is holding them up. But I wouldn't be very confident if everything else starts falling. They may also give up. Initially, they will attract a roll of funds from more risky stocks into quality out here, but then they will also start going down. Google has performed slightly better. We'll have to wait and see whether it's a trend change taking place, but I can't comment on that until I see the candle for tomorrow. Right now, it's not looking great. MACD is bearish and the momentum is also below average. So those are the shares. And looking at those 4 market movers that we take care of every time, it doesn't look to me like we are going to do any well tomorrow unless we have some good news from somewhere. And I don't know what that good news is going to be. So that's what I would like to end this segment with. If you want, you can watch the next video that I'm going to post, which is going to be genomics technical analysis.